The Japanese yen was under the spotlight last week as Prime Minister Noda surprised the markets by dissolving the lower house of parliament, which will now trigger an election to be held in December. The development traced the prospect that the next likely Prime Minister, Liberal Democratic Party leader Abe, will push for more aggressive easing by the Bank of Japan. Meanwhile, stock markets stumbled over concerns on the U.S. fiscal cliff. But such risk aversion was not reflected in the Forex markets. Mild weakness was seen in the Aussie and Canadian dollar, but it was far from being decisive. There was still talks about uncertainty on the Greece situation, but we must note that the euro and Swiss were indeed the strongest currencies last week. That certainly told us markets aren't too worried about the eurozone. Technically, the anticipated rebound in stocks didn't happen. The Dow Jones breached the 12,500 level briefly last week, and we might see a deeper sell-off ahead, before it gets some strong support from the 12,000 psychological level. The developments might help lift the dollar index towards the 82 level. And based on current price structures, another low in the euro-US dollar below 1.2661. And British pound US dollar below 1.5927 is likely. But their weakness might somewhat be neutralized by buying in yen crosses. The same could be said in commodity currencies where US dollar Canadian dollar's strength looks tired. And Australian dollar US dollar's fall is far from being impressive. So overall, selling the yen will be the preferable choice. And based on anticipated weakness in stocks, long US dollar. There was some positive news on the US fiscal cliff on Friday. President Obama said he had a constructive meeting with congressional leaders, and he said that everyone agreed to find solutions and take action as soon as possible. House Speaker Boehner presented his framework for a tax and spending overhaul. He sounded upbeat, saying that, "We've put revenue on the table, as long as it's accompanied by significant spending cuts, and it's going to be incumbent on my colleagues to show the American people we're serious." Treasury Geithner said that was a good meeting, with very good tones. Geithner is optimistic that the deal on averting the fiscal cliff is doable within several weeks. Nonetheless, he also urged to clear the picture sooner rather than later because of this huge cloud of The October Federal Open Market Committee minutes unveiled that policymakers discussed several issues at the meeting, including replacing the calendar languages to a data threshold in future guidance, and implementing additional asset purchases after the expiration of Operation Twist in December. However, no consensus was reached during the meeting and no action is expected in December. The minutes also stated that committee staff revised up the economic forecasts in the near and medium term, but suggesting that progress in reducing unemployment over the projection period was expected to be relatively slow. In Europe, Eurozone finance ministers agreed to grant Greece another 2 years, until 2016, to lower the deficit to 2% of GDP target. Also, the debt level is targeted to be brought down to 120% of GDP until 2022. As expected, the decision to release the next tranche of bailout funds hasn't been made. Juncker said that, "A few more things have to be checked, because not everything that was promised to be done, has been done. But these are more minor things that can be tackled administratively and not legally." Juncker expected to have a definite decision at the November 20th meeting. Also, International Monetary Fund Chief Lagarde will cut short his Asian tour. Data from the Eurozone showed that the 17-state region is back in recession with a 0.1% quarter-on-quarter contraction in Q3, following the 0.2% contraction in Q2. Among the member countries, 5 were in recession, including Greece, Spain, Italy, Portugal and Cyprus. Meanwhile, Germany and France only grew a mere 0.2% quarter-on-quarter. According to the European Central Bank's quarterly survey, economists lowered their Q3 growth projection to 0.3%, down from 0.6%. 2014 projection was lowered to 1.3%, down from 1. The Bank of England's quarterly inflation report delivered a dovish tone on the UK's economic outlook. It downgraded the country's economic forecasts and suggested that growth will be weaker for longer. The central bank anticipates annual GDP to expand 2% in 2 years, while inflation will be at about 1.9% at the end of its forecast period. Policymakers did not rule out further monetary easing but stated that the Monetary Policy Committee members discussed a wide range of policies. The yen was broadly sold off after current Prime Minister Noda said that he will dissolve the parliament, which then happened on Friday. That triggered an election on December 16. It's believed that the opposition Liberal Democratic Party will be the likely winner in the election, and it will give the Bank of Japan additional pressure on policy easing. Indeed, LDP's leader Abe has openly said recently that the bank should continue easing until inflation hits 3%. That's a very aggressive target considering that the central bank's 1% inflation goal is still far from sight. Other policies that he advocates include sub-zero interest rates and an increase in public investment.